Now, here is Ticky Fullerton on Your Money.
Hello there, I'm Ticky Fullerton, every night bringing you a full hour of the very best in business coverage across the nation and internationally, especially where business and politics meet. Coming up, I'm in love with the brand. Daigou queen Livia Wang gets the thumbs up from creditors to rescue Aussie cosmetics business Napoleon Perdis with a plan to regroup and then spring into China. Our interview just ahead. Holding out hope for a change in Labour's franking credit policy. Leo Shanahan talks to Plato Investment Management MD Don Hamson. And China investment in Australia plummets 37% this year. KPMG's Doug Ferguson takes us through his analysis of interviews with 56 Chinese invested companies based in Australia, their take on the investment climate and key challenges they face in Australia. Well, important messages over the weekend from both Indonesia and Malaysia, our two closest Asian neighbours. Indonesia first. Presidential elections in the world's largest democracy are just 10 days away. The incumbent, Joko Widodo, is telling the people to party for democracy. His rival, former General Prabowo Subianto, is a pretty serious and angry package with messages around protectionism, Trump style, stamping out corruption and more generally on more control. In his speech to 150,000 supporters who turned up at Indonesia's national stadium yesterday, he even broke into English for the benefit of the foreign press. He's behind, but even if he doesn't win, he's calling for demonstrations. Our interview with the Lowy Institute's Ben Bland coming up shortly. Well, in Malaysia, it's not national politics, but Dr. Mahathir, who is making a surprise Aussie takeover bid even more intriguing. The president on Friday announced new environmental conditions on Linus around the low-grade radioactive waste from its rare earths processor in Malaysia. It's all come about thanks to Wesfarmers' $1.5 billion tilt at Linus, its first big acquisition idea for a while, with a strategy to capture the non-Chinese rare earths market. Well, I spoke with Linus CEO Amanda Lacaze after the Wesfarmers move. She was pretty unimpressed with Wesfarmers' shift from industry partner to hostile bidder. There were reports that the Wesfarmers team had been stepping around Linus and talking directly with the Malaysian government just at the most delicate time of negotiating Linus's licence extension. Well, Dr. Mahathir, not a man to be trifled with himself, has now said that parties interested in buying Linus have agreed to extract radioactive waste from raw materials before they're imported to the processing plant in Malaysia. Read Wesfarmers and its plans to do this in Western Australia. Well, needless to say, Amanda Lacaze is not taking this lying down. Linus has had to look at scenarios of a knockback regardless of the Wesfarmers intervention. Today, it told the ASX that it too is looking at a Western Australian processing. We see value in operating alternative cracking and leaching processing close to our resource, the company said in a statement. We will provide a further update on our plans and progress in the coming weeks. Well, the really interesting development here is where Linus's Japanese stakeholders sit. They're both the buyers of the product for manufacturing, but also critically, they own the debt. One of those lenders stated, Sojitz values our close partnership with Linus and the Linus management and sales team. We look forward to continuing to grow our business alongside our colleagues in the Linus management team. Well, carefully chosen words, you would think. Dr. Mahathir said not one party, but parties were interested in Linus. You can see the value for Wesfarmers, and it's not out of the question that Ms. Lacaze and her team could become part of the conglomerate. But her comment today for bidders like Wesfarmers was blunt. She said the rare earths market is littered with examples of private equity guys who thought they could build and run a rare earths business. Well, let's stay in Southeast Asia. Chinese investment in Australia has fallen to the second lowest level in over a decade, down more than $8 billion in 2018. A new report released by KPMG and the University of Sydney has found while Chinese investors still view Australia as an attractive place to invest, they're finding it harder to get capital out of China. But the downward trend doesn't have to be the 2019 story, with one of the report authors saying we could see a pickup in Chinese investment. Private companies dominated the investment landscape with an overall trend towards smaller sized deals. Healthcare was the most popular sector for the Chinese investors, with commercial real estate falling to second place. I spoke with the author of this research, Doug Ferguson, KPMG's New South Wales chairman, a little earlier. Doug Ferguson, nice to talk. Now, the thing that shocked me about this figure was the investment fall of 36.3% from the Chinese.
Yeah, it's certainly it's the biggest one we've had in terms of falls for a long time. And it takes us back to the second lowest level of Chinese investment in Australia since 2008. So it's very significant, especially in the context of a 4.5% increase globally of Chinese investment.
Yeah, there are pull and push factors. I mean, there's actually, challenges, as I understand it, getting money out of China.
Well, that's what 80% of the executives that we surveyed said, and they know best. So, yeah, it's certainly an issue. So it's not just Australian government settings, it's very much what's happening with the Chinese government as well. And a lot of the investment that's getting approved is going towards the Belt and Road Initiative projects in Central Asia.
Yeah, so there's been diversion elsewhere. I suppose that's a political imperative in and of itself, isn't it?
Yes.
Okay. Who did you survey exactly?
We surveyed the executives of 59 Chinese companies that are operating in Australia. So a good cross-section of state-owned and privately owned companies across all states. So it's a very good cross-section to take the pulse. And it's the third time we've done it, so we can benchmark the results against prior years.
So looking at this with some context, can you give us some colour around what the major areas in Australia that Chinese investors have been long in, if you like, and how that is changing? Yes, over the last 3 years, it's really been a move towards the privately owned Chinese companies as the most active. So in 2018, they accounted for 92% of deal flow activity in Australia, and the SOEs have gone very quiet. And these Chinese private companies are investing into healthcare, they're investing into real estate, they're investing into services and advanced technology, food and agri, those sorts of things that really connect back into the Chinese consumer market back home. And we always think of course, the Chinese investing in residential property. That has become a lot harder in the last year or so. But the interest at the moment is very much commercial property? That's what we look at. We don't look at Chinese individuals buying properties, but of course there has been a pretty significant drop in new commercial property developer investment, and that's very much linked to the fall in the demand from Chinese individuals. There's been a very common theme of defaults on deposits, and then of course the broader Australian domestic market has had its adjustment, or it's going through its adjustment for property as well. So all of these factors combine. Taking a step back, what about the China-Australia relationship? How has that impacted investment? Well, it's certainly 2018 for, I guess, the first 7 or 8 months was a pretty hard stage of the relationship. Former Prime Minister Turnbull's speech, followed by a very successful trip led by former Prime Minister John Howard to Beijing, really lifted the relationship and the warmth back to where the business community would like to see. And it's about that time that we did our survey of the Chinese executives. So they noticed that there was a slight improvement in the sense of being welcome to invest in Australia, but that hasn't been checked more recently. And are there other factors like, we always hear that the cost of electricity, for example, in manufacturing or indeed our corporate tax rates, are those the sort of things that could drive choices of where Chinese companies put their investments, do you think? Well, Chinese investors tell us that Australia is about the second most expensive country globally for them to invest and operate. So all of those things. And then issues with dealing with Australian management, with Australian board members, but most particularly they feel most uncomfortable dealing with Australian media. So they're
they're the common issues that I think a lot of foreign companies are feeling, except for perhaps the media issue.
Tell us a bit more about the media issue. What makes them uncomfortable?
I think it's really it's a clash of cultures in a way. The Chinese executives that come here I think they don't actually have the experience in dealing with westernized media, and they feel at the moment as though there's a lot of very specific attention on them. My view is that the Australian media are reporting on what's happening and what they're hearing, and it's important that Chinese executives need to prepare to tell their version of the story as well. So it's not all one-way traffic.
Yeah, and Doug, do you think the Huawei issue has had a lot to do with that?
The Huawei issue has been a constant. It's certainly something that has been talked about a lot in the business sector, but it's more than that. It's just that there seems to be a predominant interest in China at the moment, whereas Japan, South Korea, Singapore, even Indonesia are very sort of low key in terms of the Australian media coverage. So yeah, there's a number of things that we could look at, but at the same time, as I've mentioned, Chinese executives need to get better at adapting and dealing with the Australian media.
Do you think there's pressure now on Australia to look at other sources of funding? We've got a credit squeeze on, we hear, in areas, for example, like agriculture. And to what extent is the politics also playing at this again in terms of, you know, any concern about China ownership?
I think we need to prepare ourselves for potentially a sustained period of lower activity from state-owned enterprises. They're clearly focused on the Belt and Road Initiative, but I'm still very encouraged looking ahead at what opportunities might open up for healthcare, for education, for food and agriculture in terms of Australia-China partnerships. And we've seen this early stages of this. There's no reason why we shouldn't see more of it. It's just that there's at the moment there's a bit of a pause, and perhaps it's also related to the understanding how the election outcome goes. But I still feel very confident about the long-term future of Australia, China, and the business community have spoken loud and clear in the last couple of weeks on this.
And you think, I mean, we've obviously got a lot of, particularly say in the dairy industry, our exports and the vitamins industry, our exports are really, it's crucial, their dependence in terms of markets on China. Do you see that as making some very helpful building relationships? Because once again, the partnership model seems to be the way to go.
Yeah, 100%. And you know, the Chinese aren't just buying product; they're also wanting to work and leverage our science and technology, our devices, our know-how. And there's no reason why Australia should be trading away all of that and not participating in the long-term growth of the Chinese market. So, the model that we like to see, particularly in food and agri, is one of partnership where both sides bring the unique strengths to bear to build a really successful regional business.
Can I put you on the spot and ask you whether you think next year China's going to have over $8 billion of investment in Australia?
It feels very subdued at the moment, Ticky. I hope that there's a significant increase, but we'll wait and see. I think that there's a lot that both governments, either the ALP or the Liberals, have to deal with in terms of global issues related to China that they're committed to working through. They have a very significant impact on what happens in trade and investment.
Yeah, including the America-China trade situation.
Correct, yes. So we're waiting to see how that plays out, and hopefully it's not damaging to Australia's exports.
Right. All right. Well, it's such an interesting place. I'd look forward to seeing you in a few months. Maybe we can see which way we're headed. Doug Ferguson, thank you very much.
Thank you very much, Ticky.
Welcome back. Now let's go to beauty. Creditors in the Napoleon Purtis liquidation case have today voted in favour of a buyout proposal, just in the last actually half an hour. Late last month, a deed of company arrangement was proposed to transfer the struggling cosmetics brand to Kuba Investments, a private investment company led by Daigou Queen Livia Wang and former Witchery executive Henry Lee. The plan is to refresh the brand's popularity in Australia and eventually lead to a rollout in China. Co-founders Napoleon Purtis and his wife Sula Marie will stay on as creative consultants. Well, Livia Wang, owner of Kuba and also managing director of Access Brand Management, joins me live at the desk. Well, Livia, congratulations.
Thank you very much.
I mean, they say you're actually, you know, a Daigou queen, and now you're moving to become a brand queen. Is that right?
We do love brands, and that's how we recommend all the individuals to represent the brands they love. So I do think that's a very good journey.
What attracted you to Napoleon Purtis?
We do believe, first of all, the product's quality is the thing we look at, the most important, crucial part of a brand. That's the spirit of the brand, and that's the reason why consumers often go back to a brand for. So
there was opportunity here as well, because Napoleon Purtis was obviously in administration, and it would appear that the creditors are owed, I think, over $20 million, but that the administrator thought they would actually get a better return going forward with you guys than if Napoleon Purtis was liquidated, which is great for everybody who loves the product. So what are you actually going to do?
First of all, we do plan to stay in Australia, and we do want to have the brand represent to the consumers who have supported this brand for a long time. We want to make sure this brand evolved gradually with the time. So that's the first step we're going to do, continuing the brand in Australia.
What about shops? Because you do have bricks and mortar outlets, don't you?
Correct. We do plan to keep all the stores as many
so you're keeping all 28 that are still open?
We do believe so, and we do want to open a lot more moving forward. At the same
staff?
Everyone has to stay to support the growth, so we do believe that's something we will need their support for.
Okay, two crucial staff members obviously are Napoleon Purtis himself and his wife. What role will they have?
I do believe they have built a very, very good brand. In the past, in the past 20 several years. We do love the creativity of them contribute to the brand, so we do think they will keep doing that.
So they will literally input in terms of the styles, the products, that sort of stuff.
I do believe so.
Under a new chief executive, though, who will run it?
I think so.
Yeah, okay.
So we keep the spirit of the brand.
Exactly. So and you'll do it. You've actually bought the business, or taken on the business through Kuba. Now, Kuba, you say, is short for incubation.
Yes.
Is that the vehicle that you use to buy a lot of these brands? Sure.
Well, Kuba represents as an incubation of the brands. In a century like us, the online, offline market, global expansion, we do need to have a vehicle to make sure we get the brand in an incubation stage, to make sure all the strategies in place, all the products developments in place before actually moving globally. So this is mainly to represent a concept that we wish all the brands can be incubated before they go too
So Livia,
fast.
what do you think actually went wrong in your view? Because you're the new owner now. What do you think went wrong with Napoleon Purtis?
To be honest, as an entrepreneur, we know we will make mistakes.
Yes.
If we know there are mistakes, we won't make them. But sometimes we just can't predict that well. Therefore, we do believe, for example, they expanded too quickly. And want to do a lot of things at the same time.
Yeah.
And then we didn't, or there was opportunity to keep up with the trend, but we didn't. There are several things when we missed. When time goes so fast, sometimes the business will be in trouble, but I think that they can be fixed.
So really you're talking about overreach, perhaps being too ambitious with the strategy?
yeah, sometimes it could be the challenge.
So obviously there have been a number of stores that were closed before you took it on.
Yeah.
How are you going to get back that brand, get back that connection with customers?
We do think the right approach in terms of a management skill need to be implemented, and we do appreciate the opportunity for us to review what's the current status and to make sure if we need ongoing support to other stores, and what would that be? Maybe technology, maybe management skill, maybe look at the online strategy together with the offline.
Yeah, what about online? What would you do likely with online, do you think?
There are a lot of great examples on the market for us to learn from.
Yes.
And we do think the implementation with a couple of key strategies can make this brand really appealing to a lot of consumers from online approach.
And will you look at how you deal with your other brands and take some of your ideas from there and pull them across to Napoleon Perdis?
I would like to learn from all the best brand operators in the world, and not only what I have done, but apparently our experience in the past can help us to manage this better.
Yeah. And Livia, how long do you think, I mean, there's an expectation that you might, once you've regrouped here, pitch it all off to China. What timing do you think?
This is a global brand. There is no specific time frame in my mind at the moment, but we look at all the global opportunities and we will choose the best one for Napoleon Perdis.
Oh, so not necessarily China?
Not necessary, but it could be an option if the opportunity is right.
And how much investment are you do you think you'll be putting into the brand this year?
We do prepare to invest. With the brand at this level, we do prepare to let it become another iconic brand in 50 years as well. So we do prepare to invest.
And have you had lots of chats, presumably with Napoleon Perdis yourself?
I do.
You do? What do you think of him? He's a character, isn't he?
He is, but at the same time, he represents the spirit as an entrepreneur. He is enthusiastic. He is proud of his products, and he would like to do a lot more. So that's something we would like to keep talking to him.
Well, it's a terrific story, and I hope creditors too. So Livia Wang, congratulations again.
Thank you very
much.
much.
I wish you all the best. Thanks so much.
Thank you.
After the break, Prime Minister Scott Morrison plays down remaining approvals for the Adani coal mine. We'll hear from Sky News political reporter Annelise Nielsen next.
You're watching Ticky on Your Money. Now, back to Ticky.
Yes, welcome back. The Prime Minister has refused to be drawn on whether his government will sign off on the Adani coal mine this week. For more on this, I'm joined by Sky News political reporter Annelise Nielsen. Annelise, this is always going to be a very sensitive issue, isn't it, during the campaign?
Absolutely, and when he ventured into Queensland, there was no doubt it was going to come up, but probably not in the way that the Prime Minister was expecting. He was attending this business lunch in Brisbane where he was talking about his plan for the economy, and he was interrupted by the protesters more than once. They were pretty creative about getting on stage with him and caused quite the stir.
On your table.
You need to stop Adani coal mine. This is going to be the climate election. I'm sorry, sir, but it will be. And my future generation is at stake. You guys, we will be everywhere that the LNP goes because we care about climate change, and this will be a climate election.
So how good's Trevor Evans? Okay. Take two. Take two. Do we have contestant number 3?
How can that be a sustainable future for businesses or anyone else in our society if you don't have an adequate climate? You're missing the point.
I'll come to climate, don't worry.
Wow.
So, Ticky, he did take it all in his stride today. It was 3 different interruptions. I think his security detail was caught a bit on the hop there, but this is the question his government does have to answer because there is pressure for the Environment Minister, Melissa Price, to have this signed off by the time the government goes to the election, which, as we know, can be any day now. But it's something that the Labor Party's also being wedged on as well. They haven't necessarily come out in support of Adani either. Instead, we've heard Bill Shorten say that he wants to leave it up to the experts, not saying whether he would sign off on those approvals either, and that could very well be a question put to the Labor Party down the road if they do win the election.
Yeah, I thought it was interesting to see Bill Shorten say, oh, well, Scott Morrison, you know, he says one thing up in Queensland, another thing down in Victoria. I mean, surely Bill Shorten could be accused of the same sort of thing, wouldn't you say?
Oh, absolutely. And Bill Shorten's answer seemed to change on depending how close he is to different union reps, because we know the CFM-MEU has been very vocal with the fact they want this mine approved. They want the jobs out of it. It's just a bit of a hot topic issue, and it is hard for both parties dealing with the fact that many in Queensland want it and many outside of Queensland don't. At the end of the day, it's not even really going down party lines.
Do you think this decision will have to be made during the election campaign? I mean, can't they just both sit back on process taking a little bit longer?
Oh, absolutely. I think this will be handballed right down the line. I think because the issue is that they want the approval, the Queensland MPs want the approval before they go into caretaker mode. The only issue really facing the government is the fact that the Nationals have been quite vocal. We know there were reports this week that Matt Canavan had threatened to quit over it. It was becoming such a divisive issue. Now, they've denied that, but there is certainly very strong evidence to the contrary. And so it's something that is just absolutely turning into a hot button topic. And Queensland so critical. We saw the Longman result. We've seen how many seats there are becoming marginal, and it could potentially affect really senior Liberals like Peter Dutton. So it's absolutely something they're going to be worried about, but you're absolutely right, it has the potential to be handballed right till next year.
Yeah, so if Melissa Price just falls back on process and says, sorry, can't do anything before we go into caretaker mode, is that likely to be received very negatively up in Queensland as opposed to Labor's offering?
Well, what Labor's said is essentially the same thing, that they wouldn't contravene the law if it's agreed to. They would go with that. They've said that if there needs to be scientific questions answered, they'd leave it to the scientists, is what Bill Shorten was saying today. But Melissa Price has been a pretty controversial environment minister in that we don't hear from her much at all, and when she has done her few media appearances, they have been somewhat not well received. But it is one of those issues where generally the people who are against Adani probably weren't going to vote Liberal anyway, because they wouldn't trust them on their track record regardless, and so it is those key people who want to see the job. So it could be an advantage for the government, but there's obviously a big downside, which would give them the opportunity to just kick the can down the road as well.
Right, they need all the advantage they can get at the moment. But anyway, Annelise, Nielsen, thank you very much for joining us. OK, well, sticking with politics now, and with an election due to be called any day, as we were saying, one of the most contentious policy debates centres around Labor's pledge to scrap refundable franking credits. Last week, a report by a coalition-dominated parliamentary committee looking into the policy recommended against the abolition of the franking credits refund, while a Labor minority report gave it a green light. Kel Surprise, Your Money's chief business reporter Leo Shanahan caught up with Plato Investment Management MD, Dr. Don Hamson, who is holding out hope for policy alternatives and its likely impact on the federal election.
Don Hamson, thanks so much for joining us.
Thank you.
Now, look, on Friday, we had the report on the inquiry into the implications of removing refundable franking credits from the House of Representatives. A fairly controversial inquiry, it's fair to say. What's the point, do you think, of an inquiry like this, given the partisan outcomes?
Well, I think at least it highlights all of the issues up front. So, you know, we have had a number of people put submissions, including ourselves, and so we do know a lot about those people who are affected and how a lot of them are affected pretty significantly. So I think it gets everything out of the open, but not surprising the end result.
Yeah. Now, look, do you see any possible changes in this policy from the ALP should they form a government in May? Do you think that they're actually too far down the road, too wedded to it, to even consider any changes?
Well, I think, I mean, clearly they're not giving anything up at the moment, but I think they will probably need to do something to get it through Senate, because I think it is pretty controversial. It does impact a lot of retirees, some of them not that well off, and I think it'll be trouble for them to get it through Senate. So I think that's going to be the tough ask for them, is how to get this through Senate.
And it's an interesting point that I think people have forgotten about, is that that there is likely still that problem regardless of what happens in May. So what kind of alternatives do you think they might be considering, or you would ask them to consider? Because you're not in favour of the policy as it stands, it's fair to say.
That's right. Well, I think one of the key things that the ALP keep talking about, and it is true, that the lion's share of all the franking credit refunds go to the top 10% of self-managed super funds. So, I mean, what we would like is something that specifically targeted that high end. And so there's a couple of ways you can do that. One is to have a maximum refund per person. So a number of people have, put various numbers around that, like 10,000 or up to 15, and some a little lower. And that would solve the problems for a lot of the wealthier people, but clearly would limit for the large people. I mean, another one which Rice Warner has also talked about is actually limiting the amount you can have in super, because the real problem is that the largest self-managed super funds are massive in size. I mean, the top 10% start at 2.4 million, but if you actually look at the top 100 self-managed super funds, their average size is $80 million. Wow. And remembering that there's usually only 2 people in a self-managed super fund, that means you've got $40 million per person. That's far more than anybody needs for their retirement. So I think something that might, limit those massive self-managed super funds, or limit the maximum reduction.
Where would that kind of taxation is effectively what it would be? Where would that kick in, do you think, to limit that saving within self-managed super?
Well, as I say, I'm not going to put a number on that, but Rice Warner have. They've said 3.2 million. 3.2. And whether it's a tax or not, I mean, it may be you tax self-managed super funds at a higher rate, or maybe people have to take the money out above that amount, and then it's in their own hands and they do with it what they want. Yeah.
Now, on a more kind of general point, I'm interested, does it strike you there's a real generational divide in this debate? Robert Godlipson wrote a piece in the Oz last week on this topic. It's occurred to me several times. I mean, for example, most of my generation wouldn't really know how this works. I'm only across it because I'm a financial journalist, frankly. And it is interesting. And then you kind of explain it to people, or they have a vague idea, and they say, well, who cares? They can afford it. Why should they get this money tax-free? And while there's this whole gap in the debate, where people just don't understand why people should be entitled to these kind of payments.
Yeah, well, as I said before, I mean, I think there is a good case for the extremely wealthy to, some sort of limit. But if you look at this policy, the way I got it through to my kids, because they're in exactly the same situation, is I explain it to them in terms of their own grandmother. Yeah. Now, she has just passed away, but in her case, she only just missed out on the pension. She had $30,000 of earnings and a modest house. So she wasn't wealthy by any stretch of the imagination, but she would have lost her franking credits because she wasn't a pensioner. And so she would have lost $8,000 from $30,000 in income. So that, that's a huge amount. That's 28%. It would mean she'd be living on $22,000, not $30,000. And when I explained that to my kids, they go, my God, that's not fair. Because they thought it was all about, you wealthy people with self-managed super funds and those sorts of things. But when they put it into those perspectives, they go, that's not fair. She was poor as it was, she'd be even poorer had she still been alive. So I think, you put it in terms of those, grandmothers and mothers who are retired. But particularly also, it's like the same thing might happen to you when you're retired. So, that puts it in, I think, into some perspective.
Yeah, do you think the outcry is particularly strong? And there's an equitable issue here in that people have set settings, monetary settings for their retirement, and that changes on them. And it's not being backdated, not like, say, negative gearing policy, at least that only applies to new properties. People can still rely on that, on the tax benefits if they're drawing it. In this, it's not. Do you think that's the issue, that people have made plans for how they're going to retire and that changes on them effectively, not overnight, but with a bit of a run-up?
Yeah, well, I think that is an important point because, say my mother, had saved the money many years ago, predated superannuation actually, but for many people, they're retired, they're not working anymore, so it's not like they can go out and get another job or a second job. I mean, so my son said, well, God, if my pay was cut 28%, I'd be up in arms, but I'd be looking for a new job. But if you're retired and you're 70 or 80, you can't go back into the workforce. So I think there's certainly a good merit to think about how you could grandfather it. How you do it is another matter. But the other issue is, okay, that's fine if you grandfather it, but ANU research says that the value of franking credits for people who are about to retire now, so you're not affected but you're about to retire, is worth about 8 to 9% of your retirement balance. So if you miss out on them, put it the other way around, you have to save 8 or 9% more. So for all of us who are not yet retired, if this comes in and we were going to have a self-managed super fund or miss out on it, we'd have to save 8 or 9% more to have the same level of retirement income.
And do you think there's a competition here issue as well, in that what it is effectively going to do is drive a lot of people out of self-managed super funds into larger, big industry funds and large retail funds that will still be able to benefit from dividend imputation credits, but as an individual you won't?
Yeah, I mean, I think that's why it's discriminatory, because, yeah, individuals like my mother had nothing they could really do about it. But you're right, self-managed super funds, many people in those can actually just migrate into an APRA-regulated fund and they'll still get the refunds. And that's the irony of this, is that ALP say they're not going to give refunds, but they will get a refund within that environment. It's just not a cash refund from the ATO, it's a refund from the other investors, but the super tax from that fund would go down, so the government wouldn't win. It'd stop the refund, but it would actually lose some super tax.
Now, what about the impact on the Australian market? There's differing views on this. I spoke to one of Janice Henderson's big investors a couple of weeks ago. They have the view that it probably won't make a huge difference, other than appeal to some overseas investments a bit more for them, for instance. Do you think that it is set a bit of a fake floor in the Australian market as is? Do you think longer term it could be a good thing for the Australian market? It has to adapt a bit more?
Well, I agree with Janice Henderson. I don't think it's going to make a big difference. I don't think share prices are going to fall dramatically because of this, because the next marginal investor, which is actually APRA-regulated funds, will come in and buy them. But for some investors, I think, you know, what has shown, and talking to people, is there are a few people who have over-invested in Australia. They have basically everything in their self-managed super fund is in Australian shares or income securities or hybrid securities that have franking credits. And maybe it's a good thing if some of those people decide, to broaden their horizon, diversify their portfolio more and get some global shares in there. All
right, well, Don Hamson, thanks so much for joining us.
Thank you.
After the break, major moves in Wesfarmers' $1.5 billion tilt for Lynas. Adam Dawes from Shaw & Partners will give his analysis next.
This is Ticky on Your Money, covering the big business stories.
Back to our top story, and Lynas is considering moving ore processing closer to its Australian mine, Mount Weld, as the regulatory hurdles facing its Malaysian processing plant continue to grow. The rare earths miner says it sees value in operating alternative cracking and leaching processing closer to the resource. Last week, the Malaysian Prime Minister said that parties interested in acquiring Lynas have pledged to remove low-level radioactivity before shipping raw materials to the country. Wesfarmers made a surprise offer for Lynas at the end of March. The proposal has been outrightly rejected by Lynas and its board. Well, for more on this, Adam Dawes from Shaw & Partners joins me live from his Sydney base. Adam, nice to talk to you. Now, when it actually happened, this tilt at Lynas, really a lot of people in the market were just trying to get, they were so shirt-fronted by it all. Do you think they understand now why Wesfarmers is interested?
Well, good afternoon, Ticky. Yeah, certainly I do think that, you know, and you would expect that Wesfarmers has done a lot of DD in the background to actually get to this point, to actually put a bid onto the table. So you would have definitely seen a lot of work, and they would have done a lot of work with the Malaysian government as well. Very top secret, a lot of hush-hush, but they certainly would have done a lot of work in the background before this would even have come to the light. We were all speculating on what Wesfarmers was going to do. We were all worried about it, you know, what are they going to do with this $2.5 billion worth of this war chest that they got from the coal sale. Now it's coming into fruition of what they're wanting to do. The market expected something in chemicals because they've got, or fertilisers, so they've got some access there. It certainly wasn't going to be another retail side of things, and it wasn't going to be coal because they sold all of their coal assets as well. So yeah, it is a little bit of a surprise that they've gone for Lynas, but I suspect, Ticky, they would have done a lot of that work previously, and they would now be feeling very comfortable with what the Malaysian government had said on late Friday.
Right, OK. So when I spoke to Amanda Lecaze, she was clearly slightly ticked off that the sort of nice partnership that she thought that she had with Wesfarmers suddenly turned to a bit of a tilt. I mean, I guess that's how some of these takeovers work. But equally, that right in the middle of sensitive negotiations that she was having with the Malaysian government, that Wesfarmers gone around the side. What did you make of her comments today to investors about this?
Yeah, it is interesting, isn't it, how these things do change and do sort of swings and roundabouts. I think the investors, you know, probably were okay with it. There wasn't really it was too much sort of scuttlebutt that I heard around the desk and around the issues. I mean, certainly Wesfarmers is a very big company, so certainly it is a part, but it is an important part for their growth strategy because they are looking at rare earths. Now, it's not rare to get them out of the ground. However, it is complex to refine these and get these into a stage worth processing, and that's some of the comments that they've talked about, is how they're going to process that and the waste that gets delivered from the back of that. So, you know, those kinds of things. I don't know how Australia will react to a processing plant being here in Australia. That has certainly been one of the things that they've looked at after, you know, various ways of doing it. And certainly Lynas has got some very good IP, and they would be able to bring that IP back to Australia. But again, the environmentalists and the Greens would not like something like that. As well as then, it's very costly to do that here in Australia. Why do you think Lynas went to Malaysia? It's not as expensive to do that. So what they've done now is they're able to do this on a cheaper rate. Here in Australia, it's going to be more expensive, and there's going to be some environmental concerns. So there's, and then you've got the Malaysian government risk as well. So, you know, there's still a fair few risks and a fair few hurdles to jump before Wesfarmers perhaps takes another stab at Lynas.
Yeah, and equally, you had Amanda Lecaze today saying, look, plenty of private equity players have been in and out of rare earths and got rather burned. She's got support from her Japanese customers, who are also the main lenders, which seem to be supporting her. Do you think it's possible that she and her management team, who the Japanese lenders appear to like and support at the moment, could actually become part of Wesfarmers? Or do you think there's so much acrimony now that that's not possible?
I don't think that's possible, but don't quote me on that one, Ticky. But I don't think it's possible. I mean, it is very difficult, and you're right. There's a fair bit of water that's now gone under the bridge on this one. I don't think so. I think that they, you know, Wesfarmers will endeavour to make this play. They're going to probably have to stump up some more money. Lynas has turned around and said, we're not interested. You know, this is an opportunistic bid, and I think it is an opportunistic bid, and they know that they've got some more cash sitting on the sidelines, so they've basically turned around and said no, you know, we're not interested. But I guess if Wesfarmers does set their sight on something, then certainly, you know, you'd think that they would have a game plan, and this would just be the start of the chess moves, or not even the midway through this game. It would be the start of this, and, you know, it will probably look ending up that, well, if Lynas is acquired, certainly it will be at a higher price than where it is today.
Yeah, very interesting. Well, we'll watch this chess game with interest. Adam Shaw, thank you so much for joining us.
Yeah. Thanks, Ticky. Have a great night.
After the break, what will a potential change in government in Indonesia mean for our economy? The Lowy Institute's Ben Bland will join me next.
Now, back to Ticky.
Welcome back. Indonesia's presidential election candidate, Prabowo Subianto, accused the government of stealing from the people at an address to thousands of supporters in a stadium in Jakarta over the weekend. Subianto attacked Joko Widodo's ambitious infrastructure plan, telling supporters that the government will have to charge higher taxes in order to fund the plan. The opposition's election campaign has picked up pace in recent weeks, with Mr. Subianto amplifying his attacks on foreigners and the press. Mr. Subianto last week said that he had uncovered data irregularities on the electoral roll, claiming that he had found 17.5 million ghost voters. He says if he loses, he will either take legal action or lead a mass protest in the street. The Indonesian election will be held on April 17, I think that's Wednesday week, with Mr Widodo taking a double-digit lead in most opinion polls. Well, for more on this really interesting election and what the economic impact might be for Australia of a Subianto victory, I'm pleased to welcome Ben Bland from the Lowy Institute, who joins me live at the desk. Ben, great to have you here.
Good to be here.
So you're doing a lot, you've done a lot of research on this election. Tell me first about the irregularities that Mr Subianto alleges that are in the poll at the moment.
Well, as you pointed out, they've alleged that there's been millions of ghost voters, and there's certainly some debate about a number of small irregularities in the voting list. Indonesia is a vast country, 260 million people, 193 million voters according to the official voter list. And I think it's inevitable there'll always be some problems, but Prabowo, who was the candidate challenging Jokowi last time, made similar claims then when he lost the election. And I think to a lot of independent observers, it looks more like a case of getting your excuses in early in case he loses.
So is he closer this time around?
It's hard to say. Jokowi's lead, as Joko Widodo, the president, is known, is bigger in the polls than the victory margin he won by last time, which was 6 percentage points. Now, as you say, it's a double-digit poll lead. But of course, I think we've all learnt lessons from Trump, Brexit and other elections in the world where polls haven't quite told the full picture. So,
and do you think there's any risk of, I mean, we hear about all this interference that could happen through social media. Is there any risk of any sort of interference by foreign hackers?
There's been some concerns about foreign hacking, but of course, companies all around the world, government departments all around the world are always being hacked. Yes. There's been no evidence of any concerted hacking campaign by any one external country, and there's no reason why any other country would necessarily want to determine the results. What there is a bigger concern about is social media and fake news. There's been a big problem, and both candidates, their supporters, have been spreading all kinds of fake news and hoax news, as it's called in Indonesia. That's a big social concern, but you have to say that both parties are equally guilty on that front in this election.
Right. How is Mr. Prabowo, how is Prabowo different from Jokowi?
I think in this election, like in many Indonesian elections, the main differences are ones of personality rather than policy and substance. So Jokowi is a former furniture businessman, a small town mayor, and he has this sort of nitty-gritty focus on infrastructure and the small things. There's a lot of concern that he doesn't see the bigger picture. Prabowo is a much more sort of strident guy. He has a sort of strongman image. He was once
an ex-general, wasn't he?
He's an ex-general. He was married to the daughter of Suharto, the long-ruling autocrat. So he, in a way, harks back to this strongman image of leadership in Indonesia. Jokowi, to some extent, represents a slightly different way of doing things, although Indonesia is always a place of contradictions, and ironically, now it's Prabowo who's accusing Jokowi of human rights abuses because of various things that have happened under his watch.
So Prabowo, as I understand it, is also quite Trumpish in his calls for protectionism, but is that likely to seep across to Jokowi as well? I mean, is this going to sort of compete? Are we possibly, even if we do have a Jokowi victory, are we likely to see a more protectionist Indonesia come out of this? Because it's quite important for us.
At the margins, Prabowo's rhetoric is much more stridently nationalistic, but if you look at Jokowi's policies, there's also been a mix of economic nationalism and some attempt to open up the economy to foreign investors, and I think whoever wins is likely to be mugged by reality because Indonesia borrows money from foreigners to fund its current account deficit, so it needs foreign money. At the same time, politically, foreign investment is not popular. Indonesians, politicians and the people want to be more self-sufficient in many respects, so I think either candidate, whoever wins, is going to face this tension between the need to attract foreign investment from Australia and other countries and to attract the technology and skills, but the fact that the public and the politicians simply don't like foreign investment in many respects.
Yeah. Ben, what's the opportunity for us? I mean, we've, of course, got our own election. What will a new government be able to do, potentially, once we've got our two elections bedded down?
I think the challenge for both governments is deepening the economic relationship. Everyone knows that the economic relationship between Australia and Indonesia is really underdeveloped. Indonesia is only the 13th biggest trading partner for Australia. Australian companies invest more in New Zealand than they do in Indonesia, despite the fact that this is a G20 economy. It's growing at 5% a year. It needs technology, it needs capital, things that you'd imagine Australian companies, Australian investors can offer. But the relationship over the last few decades has so often sort of come a cropper because of political disputes, and that's not surprising in a way when you have two democracies that are so different in many respects, and both political leaderships often end up playing to their domestic audience at the cost of the bilateral relationship.
And what is the relationship, it's always fascinated me, between Indonesia and China? Because obviously we're looking at ours at the moment.
I think Indonesia in some respects faces a similar challenge to Australia. It's economically quite dependent on exports of commodities to China, like Australia, but it has worries about the strategic implications of being too reliant on trade and investment from China. The key difference, of course, is Australia is a strategic ally of the US, and Indonesia has always maintained this non-aligned strategy. So while it's not about to jump into bed formally with the Americans or Australia or anyone else, it's certainly worried about being too reliant on China and trying to balance getting the economic benefits without becoming too dependent politically and exposing itself strategically to Chinese influence.
So finally, how is this how do you see this playing out in terms of who's going to get back in? Are there any concerns that you have?
I think most people expect this to be a free and fair and peaceful elections. There are always irregularities in such a big country that is emerging, but the Indonesian Electoral Commission works hard to make sure this is a proper, well-organised vote. And in the past, this is I think they're going to be the fourth direct presidential election. The loser has ultimately always accepted the result, and I believe that will eventually happen, but there may be a few legal challenges along the way.
Ben Bland's so interesting to get your views. We might have you back once the election happens. It's great. Thanks a lot.
Thank you.
Well, that's all for the show tonight. Tomorrow night, Australian Workers' Union National Secretary Dan Walton and Sanjeev Gupta, the Executive Chairman of GFG Alliance. Thanks for your company.